After a few months of running a lending product by one of the biggest cryptocurrency exchange, Coinbase, it was called nearly a fifth by Security Exchange Commission, SEC organization, that is supposed to have righteous judgment. But is this fair this time? Today we'll discuss over the pros and cons of this stance of SEC organization and what does it mean for cryptocurrency industry, and also lots of important information about stocks and crypto as well. So let's begin. And we are getting to economy view section and talking about the debt ceiling. So Yellen's team rejecting debt prioritization on borrowing limit. What does it mean for the market? Just we'll talk about in a second. So Fed officials were briefed about how its staff and treasury had worked together to develop a plan to handle debt payments in the event they had to be prioritized or at least not fully paid. Janet Yellen is warning that the Treasury would probably exhaust its ability to avoid breaching the federal debt limit sometime in October. So it's something that she's preparing to talk with lawmakers about boosting its limit because, as she claims, she's very concerned that within 2 months, the liquidity may suffer. And so the most likely outcome is that cash and extraordinary measures will be exhausted during the month of October. Yellen repeated. However, Republicans are against it. They are just voting for rejecting, and also Nancy Pelosi talking that it's everything unnecessary. So Democrats are currently crafting the reconciliation package, sweeping social spending bill, and hope to pass it in the coming weeks. And senior congressional Republicans have vowed not to vote for an increase of the debt limit, instead urging Democrats to pass it without their votes through the reconciliation maneuver. So there are some voices revolving around this case that failure to increase the limit could lead to a shutdown of some federal government operations, something that has happened 3 times in the past decade and likely would plunge financial markets into chaos. So whenever just the Congress is waiting longer on this one to happen, the more challenging the debt limit process will finally become, and could be thrown for a loop if one or more holdouts block the process in the last minute, and it finally may unleash a chaos into the markets, if only to provoke politicians into action. So it's a very, very hot issue right now. In order to observe how the market's reacting to those issues, we need to keep an eye on the spread in T-bills for an indication of just how the nervous markets are. And right now, there was also some concern that if we increase the debt limit, it may push us to a even higher inflationary pressures. But does it really? It's true thing. So for this, people thinking that raising debt ceiling will be bad for dollar, history just showing us typically the opposite thing, that raising debt ceiling, allowing Treasury to buy dollars from the market by issuing bonds. So that may also, so increasing the debt ceiling may be something that will sustain this bull market on stocks, and also may maintain purchasing power of a US dollar, but obviously every single time the such things as that that's increasing, it's also in the longer term addicting us to such such dovish measures that are usually leading to our dependence on government in terms of its fiscal spending. So definitely it's something that may help in the stocks and economy outlook in the short term, but in the long term it's obviously not very desirable. We also had recently Beige book published by Fed, where we couldn't find any bigger positive voice around how the economy is thriving, and so there are lots of problems in terms of its further boost. So right now economic growth has downshifted to a moderate pace, and we've seen a deceleration in economic activity that was largely attributable by dining out, travel, tourism, and also the safety concerns due to COVID-19, and also other sectors of the economy where growth slowed or activity declined were those constrained by supply disruptions the most. And also labor shortages is the problem that we need to tackle. That is also yet to be fixed. So as you can find, even despite this stock market going into a bull side, we find that economy is still in a downturn, so it's not mirroring. The economy is not mirroring the stock market. Stock market became a hedge against this bad behavior of economy, and also these inflationary problems that we are facing right now. So we may find that with all these expenditures made by governments, it doesn't meet with a real boost in terms of economy GDPs. We may have found that lockdowns were the biggest possible failures of recent 2 years in terms of how it were restricted within the countries. So in China, the stringent lockdowns has led to a possible freeze of economy, but it has happened only for the 1 or 2 or 3 weeks. Afterwards, after these lockdowns to be just pushing back, we may find that the economy was getting back to this very thriving turn of events. So with other countries that were struggling with these lockdowns to be stringent, we have found that it has mirrored on GDP into the negative side. So China had its very strict and very short lockdowns, but whenever these lockdowns were extending in time, we had a bigger downturns in terms of how economy prospered. So it's also harder to argue that even fear of the virus scares consumers of spending, and that government restrictions to slow the spread of disease therefore have little extra economic cost. So we could link between cases and people's movement and necessity of service sector growth raise the cost of lockdowns. If the lockdowns will be brought back this fall or winter, it may have a devastating consequences on how the future performance of such economies will look out. So taking into consideration all of these circumstances, we may find that it would be ridiculous to say that regarding on what Fed was doing by now, they would stop printing, they would stop just expanding their fiscal policy. Even with these lockdowns being marginalized this and the next year, Fed will likely won't need a consideration of tapering by now because of just an inflationary ratings. Fed is going to probably extend its dovish policy as economy is performing weaker than expected. So it looks like stock market performance and also commodity prices won't be threatened in the months to come regarding our circumstances. But look at this chart that we were pondering about in recent episodes as well. G3 credit impulse that is tending to lead commodity prices by 12 months right now, showing the correlation with commodity index. With this commodity, with this correction, that very severe correction on the G3 credit impulse, we may see a also slump in commodity prices. But we need an explanation regarding this topic. China's global economic heft leads many to view that credit impulse should be a leading indicator for global activity. Fearing that its recent drop into negative territory would prematurely end the recovery. But the value of China's credit impulse as a leading indicator should be considered as more like asserted than empirically established. It was working for a period after the global financial crisis, but has dissipated a bit after 2019 and is showing us something that even a opposite reaction in terms of mentioned indicators. So rigorous studies support even the notion that the direction of causality may run the opposite course from global conditions to Chinese credit policy. So right now it's important to highlight the still substantial stimulus tailwinds that should force throughout the global economy. There's also an ongoing reopening process across the rest of the world and a possible prospective second wave of the recovery. So that may be something that should run the commodity prices and also the equity prices higher for a longer period of time. And it doesn't virtually means that China is going downturn instead of the rest of the world. China is also just trying to stand on its head in terms of boosting its economy activity. Amount of outstanding relending funds soared in recent years, and right now Chinese central bank is increasingly making use of one of its this lesser known monetary policy tools to support the economy, and it may be something that should broad policy action it would bring us to a less need for broad actions like interest rate cuts. So the People's Bank of China is turning to its relending program, providing loans to commercial banks for lending to customers, and also it should boost the activity in such sectors as farming, small businesses, projects that help alleviate poverty or pandemic relief. So on the one hand, we are making nearly a headstand in terms of keeping the economy fly high worldwide. On the other hand, there are more indicators that are showing us that we are in a downturn in terms of how everything is going. So this exacting model, macro index, was designed to track the ebb and flow of an economic expansion. and it's analyzing such ratings as new home sales, housing starts, building permits, initial claims, heavy truck sales, also ISMs, margin debts, and other inflationary measures. And right now we got to the level of this pandemic downturn. It may lead us even lower to another crisis if the measures just examined and analyzed by this ratings will slump even higher. But previously, on the optimistic side, when the macro index model has broken down, it was accompanied by price strength. The stock market performance has gone forward and has been fairly robust. And right now we are getting to crypto outlook section, and the biggest news of recent days was this full adoption of cryptocurrency on El Salvador. So this nation has become the first in the world to adopt the cryptocurrency as legal tender. Right now, Canadian tourists to local construction workers may conduct transactions or receive salaries in Bitcoin, a dynamic that President Bukele has hailed in his push to adopt the cryptocurrency nationwide. "We are all paid in Bitcoin and for us it's better," said construction worker Gilberto Valenzuela. So that's something that is very brave of El Salvador's president, that is a young man that is just keeping an eye on the newest tech possibilities in terms of improves that may be injected into the country that he is governing. So it's definitely something that is worth watching of how it will turn out. Finally, I may just have my fingers crossed for Salvadorans, where I hope the president won't walk away and won't find it as a threat to paper cash, the government's cash, and hopefully this idea will thrive to its best. Something that may also promote financial inclusion of Bitcoin is that in 2017 only 30% of Salvadorans had a bank account. However, on the other hand, something that may limit an uptake of the online currency is that in 2020, El Salvador has the second lowest internet penetration in Latin America and the Caribbean. But it doesn't really as of concern right now, because civilians just believe that with this move, it may just bring a country into another level in the years to come. So finally, it may also bring such progress that was unseen before. Something that may be also considered as a possible obstacle in terms of Bitcoin adoption is this ongoing debate around the environmental impact of cryptocurrencies. So World Bank flagging potential adverse effects among its concerns, but it may be silenced in the months to come when Lightning Network and other technologies will come into fruition that are not so energy consuming. So to sum up, El Salvador will give away $30 worth of BTC to each and every registered El Salvadorian user of service provider Chivo, And if all adult citizens of El Salvador register on this application, the state will have to send 2,366 BTC in bonuses. With this very positive news from El Salvador, the whole sector has flight high for a while, and investors has been led into local euphoria, and we exceeded in price 50k psychological level on Bitcoin, 50k USD. But afterwards, as it often happens on markets, we have a sell on news event where we have slumped for over 10,000 bucks. The futures long liquidations has exceeded 250 million bucks, and also it coincided with a lowering sentiment within the futures market, where open interest has slumped to the level of August of 2020, beginning of August 2021. However, this on-chain monitoring results whale map site has registered large volume investors that were selling, that provided the vast majority of sell-side pressure around these areas to be newcomers that were mainly speculators that were just taking advantage of short-term movements. And with this sell-off, the move was quite violent, and large volumes of Bitcoin were being sold off in spot markets. But long-term holders remain unshaken. So it means that this recent move shouldn't endanger the possible bull market that may be extended in time. Something that has also converged with this slump in Bitcoin's price was this threatening to sue Coinbase Global if the exchange lets customers earn interest on their digital tokens. And SEC sent a warning to other firms already offering similar products or contemplating doing. So analyzing this issue, we can find that SEC has taken its aggressive point of view for the first time in a long time. SEC has recently been putting a lot of muscle into cryptocurrency as a possible fertile area of abuses. Coinbase Lend product promises investors they can earn 4% annually by lending out their USDC virtual tokens, tokens that are stable in price and can make a possibility to easily convert digital assets into cash and vice versa. So let's get real. Just look at, for instance, Bank of Australia. Bank of Australia right now is paying zero interest to savers and getting a loan as like a colonoscopy, some may claim, whereas such institutions as Coinbase or even Gemini pays 7.4% on USD savings rate, and soon the cryptos will be lending too. So there are lots of there is a huge temptation to investors to turn to crypto products in terms of use the traditional ways, but the government, the SEC, such organizations are always in order to look for obstacles in order to make and multiply your funds in such a possibly cute way. So in terms of all of this, traditional institutions you are entrusting your money, they have a specific legal exemption carving them out from the regulation that Coinbase need to face right now. So a depositor can get a percent interest these days in their cash, and regulators then don't mind. Interesting comment has on all of this Mark Cuban, famous investor, that the worst case for this case to happen is that if government will kill possibly trillions of dollars in economic benefit for the USA from such operations. We need exemptions like the internet got in the 90s, and is calling to call your congressperson. So this is where the things really get interested for the future of crypto and DeFi. One of the big things that was really drawing people into the space were these Fed yields for seemingly a little risk. So if this yield itself won't be sustained, that may be a real threat for the future of crypto industry. But I hope the government is not as stupid as it seems sometimes, and will allow finally, after some regulatory scrutiny, to run these products in the same manner as nearly same manner as they are right now. So the one thing we really need from SEC is this making a double verification of its resolutions. Whether which lending products are falling for this investment contract definition. So without this regulatory framework to be loosened, we may find US jurisdiction as becoming less and less attracting to new IT talents, IT geniuses, and lots of developers that are trying to make the best of its skills, and we may find in time that US may become less competitive in terms of digital area. So that's something that SEC needs to ponder about. So we may find that this decentralized solutions, whether it's lending products or decentralized exchanges or other dApps, has attracted lots of institutional attention as well. And there are not only retails that are taking advantage of these products. With this analysis made by Chainalysis, we may have found that large institutional transactions, meaning those above $10 million in USD, accounted for over 60% of DeFi transactions in Q2 2021, compared to under 50% for all cryptocurrency transactions. So we can find that those products are appealing to the people from cross-section of society. Also, with this recent news that the Didex exchange has released a governance token with an airdrop to its users that was worth up to $100,000 just and merely by using the products you might have get from 1,000 to 100,000 bucks in an airdrop, in a giveaway of crypto tokens. So there are endless opportunities around this sector, and lots of users just know that and don't want to resign of such chances around. So even with this, I wanted to show this chart. Even with this flow pace into Bitcoin funds, that is not really attracting lots of new users. The DeFi products, it's something that needs to be here to stay, and without this, and the crypto industry will not thrive as it was before. Right now, let's get to market mover section, and we are beginning with Wednesday because we haven't brought this topic yesterday as of shortened than usual episode. So we had Jolt's job openings that was higher than previous one and much higher than forecast. So it's looking like we are getting back to this full recovery. But employers have offered, so with these employers that have offered incentives to attract applicants, the pool of available workers remains constrained by pandemic-related factors. So this exactly gauge is not as important as initial jobless claims to Fed, but it's also something that needs to we need to have our eye on. So from China, we had inflation rate month over month, and it has contracted so much. So it means that economy activity is decreasing, and with its decrease, inflation rate is also getting down. So from US, initial jobless claims has turned also positive after recent gauge that has brought us back to the higher lows. We are getting back to a very low level. It means that economy is getting back to normal, but with this pandemic just hanging around, it's a little bit too early to say that everything is going to a positive direction. And on Friday we had PPI month over month that has been as expected. So with this slowing down economic activity, we still maintaining PPI at the higher level. So it means that producer prices, unfortunately, hasn't gone down. It means that the situation is still need to be fixed, and something we need to wait for longer to come to fruition. So as today's episode has been extended in duration, I'd like to have a trade idea section to be a little bit shortened relative other topics. So today trade idea proposition is a XRP USDT, and it's a chart that has shown much strength during recent ride via July and August, and right now is struggling with taking over this 1.4 level. So with this recent slump in price, we still are maintaining this support of that is at psychological level of $1. So I would expect this support to be maintained, or otherwise, unfortunately, we will get back down to 0.9 at least. So with XRP USDT that has funding rates into negative territory, and also some events coming up on this crypto, we may expect another attempt of breaking this 1.4 area and march to 1.6 level. So with this to happen, we expect XRP USDT to come to fruition. This scenario of risk-reward ratio for trade at 5.2 level, so it's highly profitable. But remember about risk management and about trade area in which I find this proposition to be valid. So if the price will get above or below this blue box, I wouldn't find this proposition as valid. But right now we are in the middle of it, so it's still quite secure to say that this trade, that this price won't get out of this exactly marked box. So XRP USDT, so literally XRP repo currency is quite controversial because it's not based on such a decentralized manner as Ethereum or Bitcoin, and is run by many less validators than other decentralized currencies, but still has lots of funds, and fan base is increasing every single year. So XRP USDT is a proposition for today. If you have any questions, just put it in the section below, and thank you very much for watching. See you tomorrow.